Hello traders, welcome back to my channel. Today, I'll walk you through a complete breakdown of the compounding strategy. The correct way to apply it, the safest way to protect your capital, and the most effective way to maximize your results. Starting with a $700 balance, I'll show you everything. From reading market structure with precision, identifying the highest probability entry points, managing risk with discipline, all the way to executing each compounding step with accuracy. Nothing will be skipped. I'll explain it as clearly as if you were sitting right here with me, learning face to face. So make sure you subscribe, turn on the notification bell, and watch until the very end. Because every point I share here could change the way you trade forever. The first step in setting up this strategy is to apply 3 moving average indicators to your chart. Start with a 7-period moving average in green, which will help you monitor short-term price movements. Next, add a 20-period moving average in yellow to capture the medium-term market trend. Finally, place a 60-period moving average in red to identify the long-term direction. Alongside these, include the MACD indicator with its default parameters. This will serve as a confirmation tool for both momentum and overall market trend. All right, traders, the application of this strategy is straightforward, but it demands absolute discipline and execution. Step 1. Focus on the green line on your chart. This is the 7-period moving average. It acts as both your trend guide and your primary signal trigger. When the green line crosses the yellow line, the 20-period MA, that's your cue to enter a trade. If the green line crosses above the yellow line, that's a buy signal. If the green line crosses below the yellow line, that's a sell signal. Step 2. If you observe more than 3 consecutive candles closing either above or below the green line, it often signals a strong trend. In such cases, you can follow the trend direction confidently. Step 3. The red line, the 60-period moving average, serves as dynamic support or resistance. When the last candle touches the red line, the next candle often reacts with a bounce, creating an opportunity for a well-timed entry. Step 4. Use the MACD default settings as your momentum confirmation tool. If the MACD shows a crossover, take it as an additional layer of confirmation, aligning it with the direction of the green line's crossover. By applying these 4 principles consistently, this compounding strategy can become one of the most reliable and profitable tools in your trading arsenal. Now, let's move straight into the live trading session. I'll demonstrate this strategy in real market conditions, so you can see exactly how to implement it step by step. Alright, I entered a sell position because a crossover occurred on the moving average indicators. The green line crossed downward through the yellow line, which is a strong indication of potential price decline. I took this signal because the crossover confirms a short-term trend shift to bearish momentum, and this movement often continues for the next few candles. Let's watch the market movement together. Okay, profit exactly as expected. This signal worked perfectly, proving that discipline in reading MA crossovers can lead to precise entries. Now, let's reopen the market and see if there's another opportunity we can take advantage of. Alright, I entered a sell position because 3 consecutive red candles closed below the green line. This indicates that selling pressure is dominant, and the trend has strong potential to continue moving downward. Such a formation often signals consistent seller strength, pushing the price to lower levels. Let's watch the movement together. Okay, profit exactly as analyzed. This signal worked perfectly, proving that reading candle closes in relation to the green line can be an effective method to identify trends. Now, let's reopen the market and look for the next opportunity we can take advantage of. I entered a buy position because on the MACD indicator, the green line is moving upward and is about to cross the yellow line from below. This condition signals a potential momentum shift from bearish to bullish, often marking the beginning of an upward price movement. Such a crossover typically indicates that buyers are gaining control of the market and pushing the price to higher levels. Now let's monitor the movement. If the analysis is correct, the price should move upward in line with the signal. Okay, profit. Let's move on and reopen the market. This time, I decided to enter a sell position based on two clear technical reasons. First, the green line on the moving average indicator is still bending sharply downward. This is a strong sign that the downtrend is intact, and there is no indication of a reversal yet. The consistent slope of the line like this suggests that sellers remain firmly in control. Second, the current candle formation on the chart is dominated by strong-bodied red candles with little to no lower wicks. This indicates steady selling pressure where buyers are not yet able to mount any significant defense. Such a pattern is often followed by a continuation of the downward move, at least for the next few candles. I entered the trade while the price was positioned below the green line and showed no strong retracement signals. Now let's watch the result. Profit again as planned. Let's reopen the market again and look for the next opportunity using the same approach. Alright, I entered a buy position because on the MACD indicator, the green line crossed above the yellow line from below. This signal indicates a momentum shift from bearish to bullish, which is often followed by a gradual upward price movement. This crossover shows that buyers are starting to dominate the market, pushing the price higher. In addition, the increasing distance between the MACD line and the signal line confirms that buying momentum is strengthening. I entered the trade right after this crossover was clearly visible on a closed candle, ensuring that the signal is valid and not just a false breakout on the indicator. With this confirmation, the probability of the price continuing to rise becomes much greater. Now let's see how the movement plays out. I entered a sell position because 3 consecutive red candles closed below the green line. This pattern signals strong selling pressure, where sellers are dominating the market direction and buyers are unable to mount any significant defense. Such a setup often indicates a strong continuation of the bearish trend, at least for the next few candles. These red candles also have solid bodies with no long lower wicks, meaning the downward momentum is steady. I took this position right after the third candle closed, ensuring the signal was valid and not a false move. Now let's see the result. Okay, profit, just as expected. I think that's enough for today's trading session. As you can see, this strategy works with remarkable accuracy when applied with discipline. If you want to learn this strategy in depth and receive direct mentorship, you can join my VIP group, where I share full guidance, execution tips, and high accuracy trading signals.